Hey, how's it going, everyone? Zachary Jensen, managing partner here at TaxWise Financial Services, where we're empowering small business owners to maximize tax savings and grow with confidence. Today, I wanted to make a video about the differences between business and personal taxes. What is this? How does this whole tax thing work? This is just a general guide to go over, hey, what's the difference between personal business tax and business taxes, and how does this all apply to me? So, taxes might not be the most exciting topic, but I can try to make it as entertaining as possible, whether you're an entrepreneur, freelancer, or just curious about how taxes work. This video will break down the essentials in an easy to understand way. So let's dive in. First of all, let's go over what are taxes exactly and what are personal taxes. So personal taxes are all about you, the individual. These taxes come from money you earn at work, interest in your savings, or from selling things like your stock or your house. The more you earn, the more taxes you pay. That's just how things go. And thanks to something called a progressive tax system, we're able to charge folks who make lots more money more in taxes, while folks that earn less in money less in taxes. Business taxes are a little bit different. Business taxes are for companies big and small. They're based on the money a business earns and can be varying depending on what kind of business it is. A mom and pop shop will pay taxes very differently from a huge corporation like Amazon. And the good news, businesses can often claim more tax breaks than individuals. So if you're a small business, that's great. If you're a big business, some people might feel bad about that, but that's just how the system works. So the different types of taxes, let's go into that for the personal and business. So personal taxes, you have income tax, right? You pay this money on money you earn, like salary or wages. Capital gains tax, this applies to you when you make money from selling something valuable like stocks or property. Payroll taxes, these things come out of your paycheck and fund Social Security and Medicare. And estate and gift taxes, these taxes are applied to large inheritances or big gifts you give to others. And if you go into business taxes, it's a little bit different. So they have similar taxes, but not exactly the same. You've got corporate tax, right? So for companies that make a profit, like C corporations, you've got self-employed taxes, right? If you're your own boss, you pay this to cover your portion of Social Security and Medicare. You've got sales tax, right? Businesses collect this from customers on things they sell. And the franchise tax, a fee some states charge businesses just for operating there. So definitely makes you think which state you want to be in. Now, filing taxes, what's the actual difference here? If you filed your own taxes or have had personal taxes due, which everyone here watching this video has, you've probably heard of the 1040. It's like your tax report card. Depending on your income and expenses, you might also need to attach extra forms called schedules to claim deductions or report things like investments. And the deadline to file that is April 15th each year. Businesses have a lot more paperwork, right? The form you use depends on the type of business you have. If you're just a sole proprietor starting out and you use Schedule C and you use your personal Form 1040, if you got a partnership, you file Form 1065. And if you have a corporation or a C Corp or S Corp, as we differentiate it here in the tax world, you file either Form 1120 or 1120S. Now let's go into everyone's favorite thing, which is deductions and credits. What can we actually write off? This is where taxes start to get interesting and where folks like us come in and help people save lots and lots of money. Deductions and credits can save you a lot of money, but they're different for business and different for personal. So, personal deductions and credits are things you've probably heard of, like the standard deduction. This is a set amount you can subtract from your overall income. You can itemize, which is what we do for our clients to save them the most money, and deduct things like mortgage interest, medical bills, or state taxes. There's also tax credits, right? These things reduce the actual amount of tax you owe. For example, the child tax credit gives parents a break on their taxes. But for businesses, the deductions and credits start to get pretty intense. So businesses get to write off things they need to operate. And here are some examples, right? Office supplies, the home office deduction if you work from home, employee wages, right? You got to pay your staff, that's a deduction. Depreciation for big purchases like machines or vehicles. And while these tax credits and deductions are great, there are a lot of mistakes that are made, and taxes can be tricky and it's easy to make mistakes. So here are some common pitfalls and how to stay clear of them. Personal tax mistakes, right? Missing the deadline, always make sure you're filing a tax return or file an extension at the very least. Forgetting deductions, don't miss out on any sort of tax breaks you qualify for. That's why working with a professional can literally save you tens of thousands of dollars in the long run. And paying estimated taxes, make sure if you do have any sort of side income or anything like that, you're allocating enough money properly for your quarterly taxes that you owe. The main business tax mistakes, we can say that businesses miss a lot of their quarterly taxes and then owe penalties, but not keeping receipts, right? Mixing personal and business finances. This is a big one we see, and it's a huge problem for folks that get audited that They can't have business and personal commingling, and then certain deductions get disallowed. So we got to avoid that entirely. And then forgetting payroll taxes. If you have employees, you are responsible for withholding their payroll taxes. So as a personal, you are getting your payroll tax withheld on your paycheck. As a business, you got to withhold that so you can pay it to the IRS. Now let's go over what happens if you don't pay the taxes. If you don't pay, the IRS can hit you with fines, penalties. They can levy your property, which is a fancy way of them just saying, hey, we can take it now. This belongs to us now. For businesses, not paying taxes can also mean losing any sort of licenses or losing your business, but don't feel overwhelmed. A good tax advisor will keep you far, far away of this sort of situation. So taxes might seem like a headache, but they're a necessary evil. And of course, folks like us make money helping people do their taxes. So if you feel like you don't have the proper support and the proper guidance around this sort of thing, I strongly encourage you to reach out to us. We may be able to help you. All of our contact information is in the description below. Thank you so much for watching and have a great day.